Good morning, everyone, and thank you for joining today. Welcome to today's webinar, Unlocking Sustainable Finance, Navigating Internal Conversations. Before we dive into the session and also to give a little bit of seconds for others to join, I would like to cover a few housekeeping details. To start with, we will be recording this session. So these will be made available just after we finish with the webinar. So if you have to step away or if you want to revisit today's discussion, you will have the opportunity to do so. We will also have 2 live polls during the webinar, so feel free to participate. We encourage you to do so because your input is very valuable in shaping the conversation that we will have today, and also to make sure that we address what actually matters most to you. So feel free to participate. We also have at the end of the webinar for around 10 to 15 minutes a Q&A session. So please use the Q&A function to submit your questions to our speakers, and we'll do our best to answering those. And following the webinar, you will receive a short survey, and we would appreciate your feedback as it helps us improving future sessions. Now, to officially open today's session, it is my pleasure to introduce Michael Ray, who is deeply committed in driving impactful change in the sustainability landscape. Michael is the Carbon Trust CEO and has been at the forefront of helping businesses, governments, and institutions transition towards a net zero future. So please join me in welcoming Michael to open today's session.
Thanks very much, Danny. Hopefully everybody can hear me okay. I just wanted to add my welcome and thank you for joining us here today. Before I talk about the webinar itself, I just wanted to give a bit more context about how we see kind of businesses transition to net zero, both what's going well and some of the challenges. And as you probably know, Carbon Trust works and has worked with thousands of businesses over recent years on these issues. So I think we're well placed to comment. I mean, on the positive, we've all seen kind of many large businesses, indeed a majority of large businesses, setting science-based targets to 2030 and to 2050. But I think what's a bit more concerning is that we're not really seeing businesses come forward systematically with robust transition plans. And that really is a worry, because from the point of view of climate change, business as usual really isn't an option. But more importantly, from the point of view of businesses, I think we think, and I think, that to be successful in the future, businesses now need to really start to transition and align their business model with a net zero future. And in any kind of transition of this scale, I mean, one can argue about the time frame, but it's going to happen. And in any transition of this scale, there will be kind of winners and losers at an individual company level. And I think we would argue that the winners will come from those organizations that really kind of shape the agenda for themselves and for their sector. And we are seeing leading companies do exactly that. However, we're also seeing a lot of companies adopting the strategy of being fast followers and kind of waiting to see what might happen. And we think that's really quite a dangerous strategy, both from the point of view of climate, given the urgency, but also from the point of view of their medium to long-term financial success. You know, we've seen in other big technology shifts where incumbents kind of resist the change and wait, and then ultimately regret not moving more quickly and more decisively as new players come into the market and are successful and supersede the existing players. And in order to understand why the transition from a business perspective is not happening as quickly as we think is necessary, we recently commissioned a survey of leading sustainability decision makers in Europe and Latin America, just to try to understand kind of what were the key barriers in terms of slowing progress. And maybe unsurprisingly, one of the key barriers was making the internal business case. You know, there are real challenges around kind of where net zero stacked up versus other priorities. You know, how net zero could sit alongside a rapidly growing business. And linked to that was very much the idea of how to unlock finance to invest in scale at the transition. And that's really where today's webinar is focused. It's a really, really important issue, but it's an issue that lots and lots of organizations are struggling with. So I'm really delighted we have some great panelists that will be introduced in a second that I think have a really a lot of insight and first-hand experience about how to navigate this particular challenge. And I'm very grateful to them for joining us today and for sharing their experience with us. I'm very grateful to all of you for joining, because you all have a key role in accelerating the transition I've just talked about. And I'm also very grateful to my Carbon Trust team, who've done such a fabulous job in pulling this all together and ensuring that hopefully it's a very big success. So I hope we get a lot out of the webinar. Thanks for listening. And with that, I hand back to Danny.
Thank you, Michael, for opening this important session and sharing such a crucial message to set the tone for today's discussion. So let's get started. And once again, for the ones that just joined, a warm welcome to everyone for joining today. We are very pleased to see a strong turnaround. This speaks, as Michael was saying, about how critical this topic is in the corporate landscape right now. Before we move into our panel discussion, I would like to briefly touch on what are the goals or what we are trying to achieve in today's session. So our main goal is to provide you with an understanding of the sustainable finance landscape and highlight the benefits it could offer to your company, regardless the size, industry, or where you are based. We have great speakers today that will share some real-world examples, and hopefully they can share with you some of those challenges that they have faced and how they have overcome those. Additionally, we aim for this session to equip you with the tools, insights to engage in meaningful conversations with your internal stakeholders and senior management. So I'm sure that you will benefit from everything that we will discuss today. Just as a starting point, I'm Daniela Cardina-Semenova. I will be the moderator of today's discussion, and I'm the person leading the Sustainable Finance for Corporate proposition at the Carbon Trust. I'm very excited to introduce our panelists for today's discussion. So we have a fantastic lineup, bringing diversity and many perspectives on sustainable finance. So first, joining us from Madrid, we have Katrin Bohel. She's the ESG Development and Impact Director at Telefonica. Welcome, Katrin. Next from London, we have Sylvie Sasaki, the Net Zero and Climate Risk Director for Aviva Investors. Good morning. Representing the Southeast Asia region, we have Adeline Anthony, who's the Head of Sustainability for Axiata Group, based in Malaysia. Thank you for joining us, Adeline. And finally, we have Pietro, the Head of Sustainable Finance at Carbon Trust, joining us from London as well. So before we proceed, we want to start with a quick poll to help us guide our conversation today. While we have some idea of the level of sustainable finance adoption across the companies that have registered to the webinar itself, we want to tailor our conversation to the ones who have actually joined. So the poll should appear in your screen in a couple of seconds, but we are aiming to understand, to start with, at what stage are you in your sustainable finance adoption? So the options are just right there. So you haven't started yet, considering any options, actively exploring providers, or already implementing SOPA structures. We will give a couple of seconds and we will close the poll in a minute. Okay, I think we can close the poll. Interesting. Thank you everyone for your responses. It looks like we have a very mixed audience today, with some of you in early stages of the sustainable finance journey and others who are, let's say, a little bit more advanced on this. I'll find these very exciting in the sense that these will allow us to explore a range of perspectives. And no matter where you are in the journey, I'm sure that today's discussion will bring something valuable for everyone. So let's start with the discussion itself. And to kick off our discussion and to set the scene, I consider it will be valuable for our audience to hear about each company's journey in sustainability, obviously with a focus on sustainable finance. But I even want to to take a broader perspective. So I was hoping, Sylvie, if you could help us here by defining your role at Aviva, and from there providing us an overview of the market landscape and understanding when companies come to you, at what stage are they typically in their journey?
Sure, Danny. Yeah. So I work, as Danny said, for Aviva Investors, which is the investment and asset management arm for Aviva Group. So that essentially means that all of the capital and money that comes in from our products, such as our insurance products or our pension products, comes into us, and then it's for us to invest that capital and manage that capital in a responsible way. So essentially there are two ways that capital can go. So it can go into public markets, where we can invest in things like equities and stock exchanges, and we can that capital becomes very liquid. Or we can invest in the private market, where we will look at unlisted assets and asset classes such as real estate, infrastructure, and company debt, corporate debt. So my role at AI is to lead, develop and implement our sustainability approach when it comes to investing and managing capital. In terms of our journey, we have been doing this for a while, not a while, but a good few years. We have a net zero target of 2040, which is pretty ambitious for an organization such as ourselves. That target was set back in 2021, and I think at that time, like many others, we probably didn't have a very clear idea of what that really meant. I think a lot of the net zero pathways at that time and still today are still not really well understood. So, we are dealing with, what does our business look like in the next 6 months to say 3-5 years, versus what's happening more in that macro environment. So what is government going to be doing in terms of policy, and how is technology going to develop to support that transition? So we're grappling with all of these things, but as we progress our journey, and quarter on quarter and year on year, we are getting better and sharper focus of what those trajectories look like. And of course, we've had a lot of support from Carbon Trust to help us with that perspective. So I think absolutely, we have a number of ESG products that we do offer to the market. We do see people wanting to invest their pensions in the right way. They want their capital to do good, and we need to be able to support that need.
Perfect. Thank you, Sylvie, for sharing that with us. And that makes me wonder, from the corporate perspective, because obviously you are in a niche, if we see the ones that are joining today. Catherine, how does this resonate with your experience at Telefonica? And for the audience benefit, it would be great if you can walk us through the Telefonica's journey, of course, and see if this actually aligns or differs from what Sylvie was sharing with us.
Of course, I agree, and not just to be polite. So my name is Catherine Bohill. I work at Telefonica. Just a quick overview. Telefonica is a telecommunications operator. We work in 12 countries across Europe and Latin America. We have near to 400 million accesses. So we look after quite a number of customers across the world. Now, the company celebrated 100 years of life this year. We started in 1924, and I think sustainability has always been something, or like whether it was called sustainability or corporate responsibility or just the social contract with the communities we work with. And that's probably been part of the way we work since we began. However, and I think this is why this panel today and the name you've chosen, I think sustainable finance is part of the piece of making sustainability part of the business. Sustainability is not just something that you do to be a better citizen, to be a better corporate citizen, but we believe at Telefonica that there is value to our business that directly flows to our bottom line by having targets in sustainability, including net zero, in our case, 2040, like Aviva. So hopefully we'll dig into it a bit later, but I think what I would like to highlight is Telefonica committed for a long, long time to sustainability, but the real way we've implemented and got the whole company going, it's a little bit of a vicious circle, but once you get the first sustainability financing structure done, then it flows. Then everybody is committed and everybody is working towards sustainability as an opportunity and not just now, as it is, a reporting requirement.
Thank you, Catherine. A very strong message saying sustainability is part of the business. I totally agree with that. Adeline, considering that you operate in an emerging market that is growing extremely fast, I want to understand, how does what Catherine mentioned actually aligns or differs in emerging markets? And here I would like to add a second question, if you don't mind, which is, considering that you operate in these emerging markets, these could have brought, let's say, some obstacles, challenges along the way. So if you could walk us through as well, like some of these challenges that you have encountered implementing sustainability and sustainable finance as such.
Yeah, all right. Thanks for having me. So similarly, Axiata, we're also a telco company. We operate across 9 different countries, mostly in this part of Asia. Apart from telco, we also have infrastructure. We own some of the tower business as well as digital businesses. So this is what we have. So we have, in June, we managed to get our SBTi validated. And of course, that was a huge step. But for us in this part of the world, you will find that most of the countries or most of the companies here would tend to look at net zero by 2050, unlike in Europe. Those mostly aligns to the country level agenda. And somewhat, our policies are still a bit not as mature. So we do take a bit longer. But similarly, but the minute you embark on a big commitment like the net zero, and when you start working on your decarbonization plan, you will also discover that there's a huge capex that is required for you to do this, number one. And sustainability is something that needs to be done across the business. So it's not just within the sustainability team, but also how do you work with technology? How do you work with network? So there's that huge coordination and joining the dots that needs to be done. So for Axiata, in 2020, we got our first sustainability linked loan. Definitely it was a good start for us because it really helped the organization to see the alignment between the business strategies and the sustainability framework. So since then, we've been having a lot more conversation. The targets, the sustainability linked loan that we did then was for group level, but now all our operating companies, similarly, they are also looking for this level of financing. So definitely you cannot separate finance from sustainability. But, in this part of the world, we do have our challenges, but, the aspiration is still the same. For Axiata, our tagline is advancing Asia. Sometimes it's even, it's even more compelling to be in these kind of countries, where you can ensure connectivity, and there's so much that you can do around sustainability apart from environment. There's also the bit on digital inclusion. How do we work around that? So that's where we are in our journey.
Thank you, Adeline. I think you both agree of the importance of collaboration and how it is important on across the organization. Just to deep dive on the challenges, I want to hear from the audience. So if we can release our second poll, I would be interested to understand what are the biggest obstacles that the companies face when starting and implementing sustainable finance. So the poll should have now be available for you. And we are interested to understand which of these ones, and you can apply to all of them, are the ones that affect you the most. So the first one is uncertainty about which sustainable finance mechanisms are best suited for your needs. The lack of in-house data, knowledge, or expertise. The resistance from stakeholders and or leadership, and any others that we haven't captured here. We will give a couple of seconds and we will review the results together. I think we can close the poll now and let's see the results. Very interesting. Well, thank you very much again for participating. It's insightful to see the range of challenges that companies face when adopting sustainable finance. Sylvie, given your experience with working with companies across different industries and different stages of maturity in their sustainability journey and the adoption of sustainable finance, I would like to hear your thoughts on these results. It is something similar to what you encounter in your daily work, or are there any significant differences?
Do you know, it's just seeing those results actually is quite interesting. So I think if you did that poll maybe 5-10 years ago, that resistance piece, trying to convince people that this is the right thing to do, I think would have been a lot higher. So I know 31%, right, there's still some work to be done there, but actually that feels to me like there's a door open there. So the conversations are happening at least, but it's just now enabling some of this work to actually happen and to start realizing some of the results. So seeing the other two there, so accessing sustainable finance, so being able to access that CapEx that Adeline was just talking about there, and then data as well, absolutely, I think common issues that, I come across, have always come across, I know my peers do as well. So I think that's probably where a lot of us are seeing our challenges right now. So yeah, I'm absolutely with everyone on this. I think data integrity and robustness is one of the key obstacles that hits our sector right now. We are often compared, I think, to, say, the finance and accounting world at times, particularly when it comes to sort of third-party auditing and getting that sort of verification that provides the comfort for those sitting in those seats where they hold the purse strings to be able to say, okay, right, that makes sense from a business case perspective, and your numbers stack up. Unfortunately, ESG data is not always black and white, and there is an element of variance that we just need to be educating people about, so that when we do present data and we are showing forecasts, that there's a real clear understanding of what that really represents, and what that deviation really means in the data, because yeah, we're dealing with some really complex stuff here. So I think the first one, yes, data, you know, that's my challenge day to day. So I'm with you all there on that one. When it comes to sustainable finance, I think probably Adeline has quite good experience to share on this one. But yes, absolutely, sustainable linked loans is one of the ways that finance can be accessed, and is quite an interesting vehicle that's being offered, and we do offer it ourselves at AI. It's really about offering an incentive to organizations to push that transition agenda. So if you're able to demonstrate that you're able to advance certain KPIs, so it might be that you're enhancing your renewable energy capacity from, say, 10% up to 50% over a certain time period, and can demonstrate that in a really clear and robust way, then you are offered financial incentives that go along with that. So you actually are rewarded. So I think they're still quite new, and there's not a huge amount of them on the market, but I think it's certainly something for people to explore.
Thank you, Sylvie. I was also a little bit surprised with the results on how easy it is to communicate internally with stakeholders and senior leadership. I was, for some reason, expecting it to be higher, but I totally agree with the other two as well. And just because I have heard so many times from our clients the resistance from stakeholders and the lack of internal buy-in, and I know that Catherine has extensive experience on this matter, and in a certain way she's a strong advocate on this topic. I want to make sure that we navigate this topic with her. Is this something that you experienced, Catherine, and maybe that you can share with us any strategies that you have used to overcome this?
No, I think if you have resistance from your leadership team, you have to go back and talk to them. I think everybody else on the poll who voted for the other options has a great chance. It just means lots of hard work. Talk to the investors. They will help you. There's lots of information about all the models. It's extremely sophisticated. The sophistication is scary because it sounds like totally complex, but really the sophistication is like a menu. It's just like there's so many options now. Don't be afraid. There is an option for you. There can be simple options where you need a couple of good KPIs, you know, and you need to work on your data, and that will mean resources. That will mean time. So to get resources and get to time, point number one is your leadership team. This is, at the start, a CEO problem. You need to get to the top of the organization and sell this. This is an opportunity for the company and not an obligation. Now, the fact that the regulators are asking for audited and detailed reporting right now is actually an opportunity, because now your organizations are trying to provide that. And no matter how complex or how organized your company is, eventually for this kind of a big move, you need the CEO, you need the leadership. So I just think this 31%, that's the important thing. And you need to get, like, perhaps not yourselves on this call, but the leadership team. And Carbon Trust has loads of resources. Reach out to Daniela, get your CEOs, speaking to them if you need some help. But I definitely think that is the major hurdle to overcome, because once that is worked out, everything else will flow. We have now made the objective that 40% of all our financing will be linked to sustainability indicators. We were the first in the market to issue in our sector a green bond in 2019, but we've totally transformed the way we do financing. And it really is now an exception, and the legacy that is plain vanilla.
Thank you, Catherine. Such an inspiring message. It makes it look easy. I understand that it's not as easy as it seems, but it's great to hear some progress and strategies that you can put in place to make sure that we keep progressing on the topic. Another pressing obstacles highlighted in the poll is the uncertainty about which sustainable finance mechanism to choose. And I would like to open the room here for whoever wants to take the lead on this. But considering the mixed audience today, I was hoping if you could bring briefly or walk us through the most promising and available sustainable finance solutions that are in the market, and maybe comment on how companies can access them.
I mean, I can probably jump in on this one, Danny. I mean, I think that the landscape of sustainable finance, at least when it comes to the credit space, is relatively well understood and well developed. I mean, the standards, whether they're the ICMA or CBI ones, which relate to bonds, or the LMA/LSTA/APLMA kind of combination, which specifically relates to loans, sorry, have really kind of addressed a lot of optionalities there, from kind of fixed use of proceeds with green, social, and to a certain extent sustainability structures, and then the sustainability linked structures, which Sylvie mentioned, and increasingly evolving into bringing in concepts around transition or mixing those structures up. You know, there's a lot out there for organizations to both explore and also find a structure that fits their needs and where they're at. I think there might be a little bit of a fear sometimes, though, particularly when it comes to targets around failure. In a strange sort of way, and there was an article in Environmental Finance, which is one of the kind of key industry publications we all use this morning, that actually said, you know, failing or not tracking towards your targets is not necessarily a bad thing. It shows that these structures are working as they were intended. I mean, you can't have 100% pass rate, and targets are ambitious for a reason. Net zero is an ambitious target that's going to take more than a village to get to. And I think when it comes to that point around kind of failing targets or the structures, I'd like to just point back to what Catherine said about whole of organization buy-in, because I think it's absolutely critical. You know, you need your finance team to come on board, but they're not sustainability experts. That's where the sustainability team kind of comes in. And there's internal discussions around, you know, how you set these up, which option you're going to pick. And you know, thank you, Catherine, also for the plug. I mean, you know, Carbon Trust and organizations like us, as well as FIs like Aviva Investors, are also here to help. You know, it's part of what we do on a day-to-day basis. Flipping perhaps a little bit to the equity side, it's a little bit more complex, I think, on that front. I think there's certainly a lot more potential for volatility. I mean, we've seen kind of a lot of headwinds when it comes to sustainable equities or sustainable IPOs. I think ultimately it's just very difficult to link share price with sustainability action in any kind of systematic way. It's much more subject to kind of supply and demand characteristics and shareholder sentiment. So, you know, debt has evolved in a really positive way. It's very systemized. Equity is a little bit further behind. I mean, as somebody in the sustainable finance space who's been in here for quite a long time, the strangest element of my career, and you know, when I bring in people like Danny into the team, is to say you've picked a career path whose ultimate ambition is to be redundant. Like, you know, I'd love for us to just be vanilla finance professionals again.
Thank you, Pietro. And I agree with you. And I think we have captured a few topics here, which are data, not being scared of failing the targets, also that internal buy-in. And I know a little bit of the history of Axiata, and however, the audience may not know it. And I think that this topic can be quietly recreated and shared with the audience and demonstrate from those challenges that you have faced in the past, how you are overcoming those in today's market.
Yeah, okay, happy to share. So because that was in 2020, that was our first SLL. It was still kind of like a learning experience for us, the first time we ever did it. So there were a couple of KPIs that we took on. One of it is, to me, it was rather simple because I think the next step to this, to internalize this is also to, you know, set more challenging KPIs. But of course, progressively where we are now, every time we have these conversations with our financing institution, we always try to look for more challenging KPIs. But then there were two that we had. One was to essentially just be included on FTSE4Good index. Okay, and the other one was to look at the reduction of our carbon footprint within one of our operating company. So as you rightly pointed out, all these numbers needs to be validated by a third-party verifier. So in our case, what happened is that the verifier actually changed the methodology and the standard that they wanted to use to verify these numbers. And because they changed the methodology, we were not able to meet the reduction target because year 1, year 2, we met. We kind of like got the savings, but in year 3, we did not meet it simply because of the change of methodology. So of course, we tried to go back to the verifier, but verifier is saying, no, we can't do that because, you know, we are improving our methodology and, you know, you always want to go a step better. And then we also had to go to the financiers to try to the banks to explain to them the situation. So that took a lot of time, a lot of discussion. So that was one of the challenges that we saw. So learning from that, you know, what we've done, you know, we've came up with a few, you know, we actually discussed with finance moving forward, should we look into this kind of sustainability linked loans? Some of the things that we need to be aware of is there a potential for changing methodologies? It will be even better if we chose KPIs where we have been tracking for the last 2-3 years using a particular verification method, you know, which is pretty common and we know it's not going to change. So those are the kind of KPIs that we need to look at. And then you always have the group level targets versus the operating company targets. So when we took the loan, we took at the group level, but the target was linked to an operating company where we did not have 100% influence. So, you know, the target is linked to us, but, you know, you don't have 100% influence of what's happening at the operating company. So learning from that, you know, when we start looking at new targets that we want to set moving forward, we start looking at group level kind of targets, you know, where we have control and you have also time to improve. If it's spread across the OpCo, you still have time to improve your performances. So I think those are some of the important things. And I think most important is that ESG goes really beyond group sustainability. When you sign up to a target, when you want to reduce your emissions, it also needs to be communicated to, to technology, for example. This is what we've committed to. What are you doing? Are we tracking this on a quarterly basis? So I think those are some of our learnings. But moving forward, as we continue to speak to our banks, we are also looking at, other ESG matters which are linked to our materiality, things like rural connectivity, for example. The social part of things, how many people are we impacting through our digital inclusion? So when we think about that, we also start thinking about what are the kind of KPIs that we're going to put into place so that ultimately we can use these KPIs as the measure when we start moving into getting our sustainability linked loans. So those are some of the learnings that we got.
Thank you, Adeline. It's really insightful to see how everything goes back again to collaboration, work across the organization. It seems very simple, but it's very difficult to put it in practice. But great learnings from that. I'm just conscious that we have been chatting about methodologies, and regardless of a company's stage in this journey, there are specific criteria and steps that need to be met, as you were saying. And however, many companies have reported that they face the challenge of not having these in-house data, knowledge, and expertise. Catherine, because you have a long history on sustainable finance, I was hoping maybe you can share some experience on how this been this journey. What are the steps that companies can take to access sustainable finance and to make, let's say, a more linear and easier journey on this?
Okay, I think, again, to reiterate, but this is definitely moving the organization internally. You have to become an intrapreneurial. You have to be that entrepreneur in the company, and you have to try and show the advantages that sustainable finance can bring. Now, admittedly, right now, it's more difficult because the greenium isn't so obvious. What we have, and there is empirical evidence that there is a margin for being sustainable, and you will get better rates in the market. Unfortunately, that is narrowing. And but what we are seeing is that when you issue sustainable finance, you have a more comforting and you will generally, and in our experience, are oversubscribed. I believe there is a greenium. It's very hard to demonstrate because you would have to issue exactly the same financing instrument on the same day, and so it's very difficult to prove. But I think, and the banks and the FIs, I think they will back me up. So I think there is definitely the market out there. So anyway, the first piece is to convince the organization that this is value, and this is value for their money, for the resources, right? Then you go on, you have to get the KPIs. You need the systems and you need the processes. And at Telefonica, we're now, because we started earlier, our systems have to continually develop and make sure that we have state-of-the-art systems to actually be able to measure. You can't build Rome in a day, and you just need to start bit by bit and just look at the indicators that are realistic to produce. I couldn't agree more with what Adeline said about the KPIs. She mentioned areas like finance, technology. Big organizations have a controlling organization. You need these all in there because you need the KPIs, because the finance community want the KPIs, So the processes and the systems, they're all there to produce the KPIs. And then finally, I think, you know, the banks and the financial institutions will accompany you and they will help, and other organizations such as Carbon Trust. So, you know, you just have to get them to help you and accompany you on the journey. And it is hard, and you will start off a little bit alone until you get the resources in to help you do this. Not just you and the sustainability team or in the finance team, but in the other pieces of the organizations to get this done. Like that.
Thank you, Catherine. And I agree. It is really important to get some support internally and externally to make this happen. I'm just conscious of the time, and I want to make sure that we have time to answer some of the questions that we have in the Q&A. Time flies, so I will pass it to Tim, who's helping us on this today.
Great. Thank you so much, Danny. And hi, everyone. I'm Tim from the Carbon Trust. So I think the first question that we'd like to get answered is, given that the perspectives shared today have sort of come from large listed companies, I think I'm going to direct this towards you, Sylvie, because you might have sort of a good sort of breadth of experience with slightly smaller companies, perhaps, and what the role is for sustainable financing for these smaller companies, and then back to that sort of the mechanisms question, what these smaller companies might consider, you know, for the first steps towards a successful sustainable finance application.
Yeah. Okay. So I think just as you know, enjoying what Catherine was just saying there, because even though I guess we're sort of a relatively big player in the market, ultimately, whoever we're financing, those emissions, so whether you're small, medium or large, your emissions are coming onto our books as well. So, you know, we are pulling you into our Scope 3 footprint. So we want to make sure as far as possible that at that due diligence stage, you're able to provide the right answers for us that give us the comfort that we are financing the right project, the right entity, the right asset. So I think, first of all, I think it's kind of all been said in different ways. We all have those conversations. Just to add as well that I think sometimes those in those senior leadership positions don't always have the right words, the confidence or the knowledge that we have as well. So I think a bit of our role as a sustainability professional is to work with that leadership team to help them articulate what they really need. And you know, that's where we can support and start to unlock some of these some of this capital. So supporting your leadership team, asking them, what are your issues? What's on your agenda? How can we support you? How can we add value here? What keeps you awake at night? Those kind of questions. And then how can we integrate ESG and sustainability into those conversations? And therefore, the next step is to then have those conversations with the relevant finance institutions to unlock that capital. But whether that goes for small, medium or large, I don't believe there's a huge difference. It's the same for all of us. I think we're all in the same boat here.
Great. Thank you so much for that, Sylvie. And I like what you're saying about the sort of your suppliers and your customers, they form their Scope 1 and 2 forms your Scope 3, and they sort of find their way into your KPIs. And so Adeline, I might send this one your way then about let's say larger companies that have the resources that are more mature on their journeys. How should they sort of approach and support the companies in their value chain, sort of upstream and downstream of them, help them get on board and sort of help you to meet the KPIs that they might be contributing to?
Yeah, so I'll just take an example, our net zero journey. So again, we've worked on our Scope 3 numbers. You know, we again, similarly, we work with Carbon Trust on that. And I think that gave us the perspective of where these emissions are all coming from. To a certain extent, you know, about 70% of our vendors, our suppliers are the larger ones. You know, you have your Ericssons, your Huawei's, they're quite ahead of the game. We do learn a lot from them. But what we learn from them is also something that we take and something that we use to work with our local suppliers as well, because one of the things that we also do, one of the KPIs that we track is also the percentage of local suppliers that we have. So we do have supplier engagement programs. We do encourage them to also report on their numbers. And I think when working with the smaller suppliers, it's also a lot about guiding them in terms of what they need to do. So those are some of the areas, because for them, they need to first understand the importance of tracking these numbers. Why do we need these KPIs before you can go to the next step of, really leveraging on these KPIs for financing purposes. But definitely a lot of them are clear, they know that these are stuff that they need to do. So it's really getting them to track it and report it. And then the next step is they need to start looking at verifying these numbers, because more often than not, our smaller suppliers don't really verify their numbers yet.
Okay, great. That's very interesting. Thank you. Thank you, Adeline. I think we've got time for one more, perhaps. So, Catherine, if I could ask you, and this is sort of coming from the point you mentioned about 40% of your sort of finance coming with sustainability KPIs, and given that there's additional setup, disclosure, and reporting requirements for sustainable finance products and instruments. If you're sort of coming and you're new to it, what is the benefit for going for these sustainable finance instruments? You said that sort of the greenium is sort of tightening a little bit, but what's the why go for it? Why go through the additional sort of reporting and setup?
Well, I mean, I think we have seen oversubscription, we have seen demand, and the demand could be questioned in another scenario. 40% is actually our objective for 2026. Right now, we're about at a third of all our financing. That moved from like 5% up very quickly. So it's I think as a sustainability professional, I think there's value, but we've managed to convince our finance team that there is value in it. So we have a great group of probably the best financiers in Spain, and they took on an objective of 40% of their financing a couple of years back. So rather than talk about oversubscription and agreement narrowing, I would just say we managed to convince our finance team to take on that objective, so they really believe it. And one thing that Sylvia said earlier on that I just totally agree with. I mean, any transaction that a financial institution does now, they need to report, because they've taken on a net zero obligation. So if you want anything from them, you're going to have to give them at minimum the emissions data. So why not try and put an objective in and leverage the fact that you're going to report that data for something? Maybe you're a small company, but at some stage you're going to need money. And the fact is, all the players, all the people you want to work with, they have net zero targets. So if you want money, this is what you got to do.
Excellent. Thank you, Catherine. I really like that. I think if we've got time for one more, Pietro, I might ask you to sort of share your perspectives on a question that's come in about loan options and sort of sustainable finance mechanisms that might be available to charities or non-commercial entities, and how you see that playing out.
Yeah, I mean, that sort of, in a strange way, is quite a nostalgic question. It kind of goes back to the very beginnings of sustainable finance, which were actually kind of quite similar types of asks, kind of early pay for performance models. So while a charity or non-commercial entities would I think naturally struggle to raise debt, and there are all sorts of kind of ethical questions around using donations to service that debt and so on. It doesn't mean it's impossible. The use of proceeds structure can be adapted to that context. So I mentioned pay for performance. Some of the earliest kind of social bonds were issued in the UK for basically attempting to tackle recidivism amongst inmates being released from prison. And rather than having this kind of interest-led model, it was much more around kind of the results-based results, and then the funds were going to specific kind of programs. So that's one option, and I think there's always a conversation to be had with that with kind of charity boards, and then ultimately a philanthropic space and philanthropic investors. I'm just also while I'm kind of looking at the questions here, just to take 2 minutes. There's one regarding kind of a listed REIT in South Africa, and how one begins to discuss with financiers kind of sustainable finance. Do you need your plans? Is there a list of financing options? I think go have a conversation with them. I think follow the lead that Adeline and Catherine have laid out of getting that organizational buy-in first. But the financiers will be happy to have a conversation, I think, Sylvie, and can then advise on what the requirements are. My kind of more anecdotal experience of sustainable finance has always been that there's a lot more of a partnership angle with the financiers than there is with maybe plain vanilla. They want to achieve, they want you as an organization to achieve your sustainability ambitions, and that's really, really important. And I don't think you should be afraid of going to speak to them and asking, what are their solutions, what's their view on the market, and ultimately also taking a look at what's appropriate for your company or not appropriate.
Brilliant. Thank you so much, Pietro. And I think we'll have to take the rest offline in the interest of time. So with that said, Digby, I'll hand over to you to give us the wrap up.
Thanks very much, Tim. And thank you to all our panelists and to Danny for hosting, and Michael for his words at the start. I think we have some slides, Stacey, but in the interest of time, just to wrap up, huge thanks to all of you for joining, and there's still almost 100 of you on the call right now. Just to conclude, I think a recurring theme of today from our panelists was about the importance of high quality data collection, both in terms of internally and getting your systems and processes in order, but also how you can demonstrate to financial institutions that you can sort of demonstrate that strong case for securing their different options and loans and bonds they can potentially offer. And making sure that KPIs are, you've got the indicators that are ready for those KPIs. The internal buy-in piece that was mentioned by Adeline, I think, was also especially highlighted as crucial for driving meaningful change. Adeline spoke about the importance of the why and why senior management would want to buy in. And if you can, as a sustainability professional, really come up with the tools and the data behind that, then I think the sustainability team will and the financial professionals will help you there. Our panelists also emphasize the importance of not being afraid to fail when it comes to its KPIs. So as Catherine said, you need indicators that are realistic to produce. But setting ambitious sustainability targets can be important learning experiences too, even when short-term goals are not fully met. And finally, I really liked Catherine's phrase about being entrepreneurial. You are the people within the business that are creating this business case. And we as the Carbon Trust and Aviva and the other panelists have demonstrated great case studies as to how you can be successful in this place, and we're always here to help you. So please do reach out if you have any further questions. Thanks very much for your time. I'm aware that we've hit full time, but do reach out if you have any other thoughts or questions, and thanks very much for joining us today.